Well, what's up, everybody? It's your girl Ericka from the Classic Climb blog. We would usually be over at Just Stock Profits, but hey, it's Juneteenth. Happy Juneteenth to you. So we're over here today. And I want to introduce my lovely co-host. Go ahead and introduce yourself to the audience, sir.
How you doing, Ericka? Really glad to bring you here. My name is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options trading program. So really quick to really enthusiastic about this particular show. Going to talk about some really important topics. And we want to put people in a position to be able to, make money out of the markets. But we need to give a disclaimer first. And, because this is really going on around is that everything that we're talking about is based on information, is also based on education and also a form of entertainment. So we're not financial advisors. We're not giving financial advice. What we want to do is kind of open your eyes to how the market is operating to put you and your family in a position to make money and also not lose money in the market.
So what the title of the show is, can you get rich off meme stocks? We have a lot of people laughing and geeking and having these memes go on the internet. And like, what does that really mean? I really want people to understand that some people say meme stocks the prices don't properly reflect the demand. But I think it's an exposure fact. Like once you know something, now you know a new trick, or you know a new opportunity to make money, or you know a new reason why you should invest in a company. Some people are investing for their particular reasons. And what are some things that you're seeing, or other than, and you can name some of the meme stocks for the folks here. What are some of the things you're seeing out of there, Mr. David?
Yeah, so, what we're seeing is that, and we kind of talked about this on earlier shows, is that the retail's perception of what is valuable from a valuation standpoint is totally different than what we would call maybe the establishment. Mm-hmm. So the establishment has their own way of valuing something, and retail now has their own way of valuing it. And it can be just for their own personal reasons. And so what we're seeing is that a lot of people are going to these meme plays for different reasons. Some people it's nostalgia. Some people actually do believe in the company. They believe in the leadership group. If you're looking at a company like maybe GameStop, other people believe that the way that this particular company is being traded, there's going to be a potential for it to increase in value in a relatively short amount of time. And so stocks that normally would be left alone or just probably shorted into the ground, you're seeing a lot of retail going into it. And then what we're seeing is that because retail's going into it, bigger institutional investors are also following behind them because of the volume and the demand for that particular stock. So, there's a lot of different reasons, but what we're seeing is that historically, retail would stay away from these because they were kind of told that these weren't good places to be. They're now making their own decisions around some of these companies. So we got, AMC, we got GME. We also got Clover, which is CLOV. We got Workhorse. We have Wish. We also have Lordstown Motors, which has some really negatively news. We also got like stocks like FRX. So you have a lot of these smaller companies that maybe are upstarts or maybe have been struggling that people are choosing to put their money into. And this is their real money that they work for, because they believe that they can get some kind of return out of this that's going to be positive for them. And I mean, I'm all for them making that decision that that's what they want to do.
Part of what I'm seeing as a retail investor, because I'm not no expert, I'm not like every day studying this. When I was like that was like college when I was in the season. I was like, oh my God. Now I have CNBC playing in the background, I have Fox Business playing in the background. I like hearing the news. But for me, what I can say as a retail kind of investor is, when you start knowing about a company, right? You're like, man, Tesla, you're sold on Tesla. You're like, Tesla is the joint. Well, then you really get into it and you realize that they play games. Like these companies been shorting these hedge funds. They've been talking smack about Tesla forever, cutting it. So it's almost like when you start getting into the minutia of it, like you realize Elon Musk is playing with them back. Right? Yeah. The Dogecoin thing, all these things, they have a life to them. They have stories to them. This information is amazing because I'm actually invested in it, right? Even when you talked about iHeartMedia, when you gave this story to it, I went out and bought iHeartMedia shares, right?
Okay.
And I was like, I'm going to buy 1,000 shares, right? I want to be getting these shareholder things. Now, I've been a dividend and REIT investor for, I think, 7 years now, almost 7 years now. And so I've consistently always purchased. And people are like, oh man, you need to be trading. And I'm like, I don't focus enough attention on it to do so. Swing trade, yes. Everyday trading, no. And so I think a lot of people get into the stories, right? If they start really getting an understanding of what's going on in the business world, that's where retail trailers pull in. Now, somebody who's a serious investor is like, well, the portfolio of the company and the P&E and all these other things, which are fundamentally correct. But we're in a market space where nobody's playing against the rules here, right? Because the rules would say AMC's dead, right? A year ago, people's like airlines are dead, cruises are dead. Well, guess what? Last couple weeks I've been in the airport. That bad boy is bustling and bustling and bustling to the point that even Delta apologized and said, listen, we're going to bring back food next month because we realize people are upset with us. Because the smart pencil pushers told them, hey, we don't have to worry about getting food for first class. Who cares? No, wrong. They were flooded with complaints for the last 6 weeks. Hard. People are like, we're over it. Bring back normalcy to the market. And so a lot of the stocks in the place that people would have said, oh, I'm not doing that. I've got a friend, Todd Milley, who's literally invested in airlines heavy. And he's just laughing all the way to the bank now a year later. So some of the side I would speak for on the retail investor side.
Yeah, definitely. And, you're talking about Tesla. Tesla was one of the original meme stocks. So Tesla 2-3 years ago was really beat down. It was under $100. A lot of people thought that it was a joke of a company. But you had a really, really passionate group of people around it. And so a lot of people that got in early, they're millionaires now because as Tesla in 2020 just went on this, crazy run of being up a few %. And I tell people, there were people that got into Tesla 2019, 2018. They might have bought a few hundred shares and they're sitting on $1 million, $1 million plus now because of the appreciation of Tesla. Because Tesla, its pre-split price would be trading now around $22,000 per share. So we got to understand that a lot of these particular narratives and just what you were saying is that the story is almost more powerful than anything else. And you being a person that understands marketing, you understand the power of stories. The story around these particular companies is really what keeps people invested. And the second thing you talked about is that we're seeing a lot of retail, and it's something that we're trying to get our audience exposed to, is the power of ownership. A lot of people are proud to say that they own GameStop. They're proud to say that they own AMC, and they take pride in that ownership, and they take pride in the fact that the CEO will pay attention to speak to them. And this is what I've been trying to communicate to people for a very long time, and you even longer, is that when you're in an ownership position, it is the job of the people whose responsibility is to manage what you own to appeal to you, to keep you as an owner and to try to get you to accumulate more ownership. So we're seeing is that when you take an ownership position in these companies, you're dealt with differently than if you just come in and do business with them or if you work for them, because the job of that CEO is to increase the value of the owners of that particular company. So that's part of this thing, is that people are feeling a sense of pride of ownership in GameStop. They believe in the CEO. They believe in the management team. Some of them really believe that AMC can turn this thing around. And other companies, they don't like the fact that I'm an owner in this company and somebody's playing against the success of the company that I'm in.
Another thing too is the exposure to people that look like you. Right. Yeah. And for me growing up, and I make it very clear in this channel, I've always been very clear that I'm a suburban kid from a cop family, like I'm suburbs. Right. And I remember having friends who this was not even an abnormal conversation. When we're in college, they had stocks. Right. They showed me E-Trade accounts, before E-Trade got a nice new platform. Right. And so I want more people familiar with it. And also, I think people, it's cool to be a business owner. But what's really cool is when you see people say Floyd Mayweather, who, by all accounts, 50 Cent says the dude can't read and all these horrible things about him. Well, he's like, why would I buy something I don't own shares in? Meek Mill, who was in prison, had this whole story, a Wall Street trapper, great guy, knew him from the beginning. Now I'm very proud of him. He's putting a face to that, right? There's even a young man, I forgot his name off Instagram, I apologize, but he had an account start with 5K, learned options. And when it got to, these are multiple plays. This is like a year and a half later. He's at to $150,000. He was like, he was depressed. He would go to work, but then this gave him a hope. And so now he realized real money is here. And he's got these 2 children and his wife. And he's like, he's showing her like, I'm not just playing with our money. Like he only took a small amount, and now a year and a half later, with more knowledge, more depth, he's making real money. Yeah, I don't know if how much he draws with it from the account, but I know it's at 150,000. He loves showing the screenshots. But you have to show people that this internet, 1, is real, and 2, the power to trade from your phone, and 3, that you can take this information and you can learn it. And that's really the problem. A lot of people assume that, this is for other people, this isn't for me, but it's really a powerful opportunity out here for folks to really learn stocks. So I'm just giving a shout out to everybody I see in the chat. Drop a 1 if you're enjoying the content so far. We've got Anaheim, California. Anaheim, California, I better see you at the Classy Climb Tour. We got Tallahassee, Florida. We got Memphis, Tennessee, Hattiesburg, Mississippi, Cleveland, Ohio, Oklahoma City. What's up? Columbus, Michigan? No, that's Mississippi, I think. And we got St. Louis in the building. What's going on? Hello, welcome back, Dave.
Yeah, sorry about that.
No problem, no problem. This guy said only 63% of African Americans are retail investors. Let's get those numbers up to 80% or more.
Yeah, definitely.
And I mean, I'd be shocked at those numbers. I definitely want to see them. But yeah, Dave, I put Wall Street Bets Instagram up here. You know, they're riding the wave. They're enjoying good life. What are your thoughts?
Yeah, and I mean, it kind of shows you how that community has spread. I knew about Wall Street Bets a few years ago. Didn't ever think they would, and they were already massive on Reddit, you know, but Reddit's kind of like its own universe. I never thought they would be mainstreamed, but it's just the way this thing has changed. So what we're kind of seeing is that this has changed, and Wall Street Bets has now spread out into different communities of people that were in Wall Street Bets, maybe they want to start their own thing. So I'm all for it because I really think that this is a space to where I want more in it and understanding like you talked about. You can just be a long-term person and have a basic understanding. You can choose to trade. There's so many opportunities in this market for you to get what you want out of the market. You don't have to just look at it from one particular perspective. But I think you're doing yourself a disservice as an individual if you don't decide to get in and kind of understand what's going on. And so you don't have to be a super focused person on it like maybe I am, but at the same time, you can understand the power of ownership in these particular markets, because one of the good things about the stock market is there's a very low barrier to entry. It's very easy for you to get in, get an ownership position, and then start to accumulate over time, where maybe in other scenarios, you would take a lot more upfront capital.
So part of why I want you guys to see this Instagram is one of the things is I'm going on tour. You guys know I'm going on tour. And one of the guys was like, yo, you need more comedy. You need a lot more comedy in your posts. And I was like, what do you mean? So oh man, thank you, Larry. I really appreciate that. You need more comedy in your post. And so look at the tactic that Wall Street Bets, which is, and this is where I can tell men versus women kind of thing, but you start seeing these memes and these very funny things where they're laughing, they're cracking up stuff, you know, and you're like, I want to understand why this is funny, right? I'm like somebody's parent. Like, why is this funny? Why is this man crying, right? Because his portfolio was up 10% this morning, but down 30% in the afternoon. Right.
Yeah.
So, you know, you start like, as you keep going through these, you start seeing, okay, what does this mean? Right. So this one is one of the funniest. I love it. It's hedge funds. And it's like, you know, somebody's getting ready to attack this guy. And he's like, call the ambulance. Boom. You know, not for me though, you know? And so it's like, there was this kind of wave of people feeling like we are attacking the hedge funds. These guys who are, and I'm gonna go ahead and say it. I'm gonna say it. It's the MAGA Trump era where, you know, they think they're better than us. They think they're smarter than us.
Yeah.
To a degree, they are. They've gotten degrees. They've specialized in these things. But in America, we have say, and the little guy, and honestly, the unsophisticated guy can still win in this country. And that's kind of where this comes from, right? This kind of push for this. So
yeah, this definitely. Is pretty funny. And I do like the memes, but one of the things is, especially on my social, that I was always worried about is I didn't want to make it seem like I was embracing the fact that somebody was on the losing end of a trade.
Right.
So I was always worried about creating comedy around it because I didn't want to make it seem like, well, you lost on this trade and I'm making fun of you. So just trying to figure out how to create comedy around it the way it doesn't across, because I've been in some of these platforms and they, you know, they clown people that was on the wrong side of a particular situation.
Right.
Or, you know, clown people that are maybe not in the trade that they're in. So that's something I was always worried about. But yeah, the humor in these particular rooms is relentless because they don't see this as like serious investing. To them, this is fun. So they see it as fun, and that's kind of how they engage with everything. But at the same time, they're also trying to make money. And they also do something that we call like the Yoloing and things of that nature. So it's really, really interesting. But in these particular places, there are some people that are very astute as far as their understanding of the market. And you can learn a lot from them because they spend a lot of time really studying and understanding how, like as a retail investor, I can try to create opportunity for myself in the market. And that's what I really enjoy about some of these places.
what I think too is, how do I get you? And we live in a culture. Let's just be honest. I have to entertain you to educate you, and that's what we live. We live in a culture where I really have to educate you to entertain you. I've got to have a joke to get you in the door. And we've seen that. I'm just going to go and say it. Johnny Bravo, love the guy. Think he's hilarious. But his whole, he literally says he has to keep being funny to keep them there. And he's talking really serious topics about the stock market. And so that's a fault we have as Americans. That's a fault as we have as people. Like that, it has to be funny. It has to do something to catch our opinion or to catch our interest. So.
Yeah, I feel you. I mean, I can understand that. So, I mean, I think they've done a great job of learning how to create that mix. Mm-hmm. So it doesn't come across like some of the more serious financial channels. And like you said, is they're able to bring in a whole different audience. So what you said is very important because I need to try to figure out how to maybe incorporate some of that into what I do to bring in those people that don't want it just to be serious all the time because they want to also have fun while they're making money.
So, prime example, this one right here, where the guy's dressed up like a clown, not just playing comedy to anybody, but he's like, me buying random shit coins and losing all my money. Well, the reason why this is so funny is because so many people are investing in stuff they have no knowledge with, but they want to be in the ground floor of something, right? Yep. So when I talk about iHeartMedia being like $23 or something when I finish purchasing it, people are like, oh, why are you buying that? $22? You're going to spend that on a dinner. That's no money. But that's why you have to kind of be invested in the story so that you have a purpose for this. And so when people look at crypto, they go, well, the United States dollar, all these issues. So I got to be invested on this because they saw how Bitcoin took off and they want to be the next person that's invested in this. So I just always think this is so.
And now that you say that, it makes more sense now why Elon went on to SNL. Because I didn't really get it, but now I get it now. Is, to create the comedy around it to get people's attention, to get them to buy into it more, as opposed to just kind of talking about the fundamentals of what he was trying to promote. So now it makes a lot more sense. So this is why it's good to have these kind of discussions, because it kind of opens your eyes up. Yeah, now I've seen that meme for like a million different things. I've seen that meme for like a million different stuff.
And this is where
if Leonardo if he actually owned his rights to that movie, he'd be like a billionaire because they use so many memes from the Wolf of Wall Street in these type of groups.
Man, I mean, the crazy part, what I'm trying to get people to understand is people like, oh, the stock market, the people on Wall Street. And this is part of, Fox News and all this other stuff where they kind of made this you versus us instead of understanding how to make money from it. Because it's like Wall Street's out here just having a party. Well, Wall Street's your neighbor who's invested. Wall Street is the firefighters, the pension, the teachers' pension fund. They are also invested in Wall Street. So to act like you don't care what's going on in Wall Street is crazy, because what happens is these things are tied to the economy. Listen, Detroit, Motor City, like the other day, I'm not trying to disrespect the person in the comments, but I was like, Michael Dell privatized the company and they could be doing as bad as IBM, but we never know. Well, somebody immediately in the comment was like, well, Ericka, Dell, you can see Dell is publicly traded. I'm like, honey, this is something you could Google. Like this, I'm not trying to embarrass that person, but I'm like, yeah, you can see Dell, but you can't purchase Dell because it's no longer available. And so just that little moment was a teaching moment where I had to be like, hey, go Google this. You know what I mean? Like, don't just respond back at like, oh, she doesn't know what she's talking about. Actually Google some of this stuff. Like, actually help yourself understand what's going on, especially in the spec market and what's going on out here. But I could be on here cutting up for a while. So another one is, this is the Wall Street Journal, meet the ETF portfolio managers trying their luck with meme stocks. So this is where I think, in my mind, I see a Cathie Wood trying to figure out, what are these young people seeing, right? It's almost like the FBI when they hire the hackers to work for the FBI. Now they're sitting here like, let me go look on YouTube. What these people talking about, right? Because people act like, oh, these billion-dollar companies aren't looking on YouTube. They're not looking in forums. Yes, they are. Yeah. They are hiring people on staff actively. And if you read these articles, this is in June, but if you read articles all the way last year, and I think you brought it up, Dave, in our off-camera comment about GameStop, AMC, and BlackBerry have surged this year. But go ahead.
Yeah, I mean, what we've seen is that these particular meme stocks, but especially AMC, BlackBerry, and especially AMC and GME, they've just gone crazy this year, especially since the top of the year. AMC ran hard, kind of fell off, and then we've seen over the past few weeks it really bounced back. And what we're seeing is not just them doing manual research; they now configured algorithms to go into these particular platforms, and if they see surge, they now look to try to figure out what to invest in because they understand that these particular stocks may be getting ready for a run. So anytime we see these meme stocks, it's not just retail that's in it; it's also really big institutional money because they want to try to understand, can we take advantage of this movement in this stock and to be able to get some type of what we call appreciation or some type of return on it before things start to kind of settle off. So we kind of think that this may be the new wave, and because they can now utilize spiders and they can utilize a lot of technology to understand what people are talking about in different platforms, and they also put people inside these groups to understand what the conversation is. This now is like the thing to do. And so what we want to understand is that we're looking at the retail investor. Is it just going to be, meme searching, and there's nothing wrong with that? Are they going to eventually matriculate or evolve into going after some of the what we call higher cap companies? Because GameStop right now is getting ready to go into the Russell, I want to say 1,000. If it continues at that higher price, it eventually to go into the S&P. So now once it becomes no longer kind of like a outsider stock or an outlaw stock, does it still get that same kind of attention? But I think these meme stocks, and I keep telling you, I want you in the market by any pathway possible. So whether it's Robinhood, whether it's meme stocks, because once you get in and you stay in for a certain amount of time, you start becoming accustomed to certain things. It changes how your brain works. It changes how you see the world. So we can utilize for the next few years meme stocks as a way to getting people into the market. I think it's going to be a good way because historically they wouldn't be open to getting into the market a different way, whether it be a 401k or maybe some type of fund, because they felt like that didn't really fit the kind of crowd that they were running in.
Right. Daniel said, "Get rich, no, make some coin, yes."
Yeah.
Which I said it's a lifeline for people. Tam said she just reviewed the Russell 3000. Did you see the other comment the guy said about your channel?
Yeah, I did see that, and I tell him I really appreciate it.
Okay, for sure. This one is the Russell 1000, the Russell 2000 ETFs returning 11, 15, 20, and 40%.
Exactly.
I'm gonna write that down.
They're rebalancing later this week. They're doing a rebalancing. And so I think they're taking GME from, I want to say the 2000 to the 1000. AMC for whatever reason didn't make it, but if they keep that price point, they probably will make it on the next rebalancing. So I just like the fact that you have a different crowd that has jumped on these meme stocks. All of them are not going to work, but they kind of understand. And I believe that you can get rich because I've seen people playing these particular plays, whether they doing options, whether they doing trading, get rich off these meme stocks. Because AMC went from, I want to say $10 a few months ago to now one time went all the way up to 70. So if you were able to accumulate a large amount and then get out when it was in the 60s and the 70s, you could be considered rich right now, kind of based on what part of the country that you live in. And it's the market that generates those type of returns that are difficult to generate those type of returns in other areas of this particular country. Is that really fast accumulation of cash that's legal is one of the benefits of being in the market. You know, if you catch that play and catch that trend, you can make a lot of money in a relatively short amount of time. And that's one of the reasons why you have so many people in the market.
I love this picture. I just cracks me up because this is how I imagine them sitting in boardrooms. Like, how did they get us?
Do that? Exactly.
What they do? Now, off to the right, just as a marketing ad moment, and as a marketing person, like, not even trying to be funny. Like, I'm literally actively trying to hire like a meme stock person because there's several people on Instagram who they just meme their way to a high level. And I respect it, but I realize that means I'm going to have to hire someone of younger age to do so, or to work part-time or work remote, because that's the cool thing, you know, work remote. But on the right-hand side of the screen, if you guys can see it, Monty Full returns, Stock Advisor, 571%, S&P 500, 128%. I love how they just did that very conveniently off to the right. And it says cumulative growth for somebody with $10,000 investment in Stock Advisor. So the biggest thing is what I want y'all to say. Everybody's not going to start with 10K. We're not.
Yeah.
I was going to do a video, but I waited till I got on here with Diamond Dave. M1 Finance. If you guys, and I've been putting my link in almost as many videos as I can. M1 Finance sent me out an email, Diamond Dave. Let me go ahead and read it to you.
Okay.
They sent it to almost everybody, but let me see if I pull it up. Here it is. Let me see. Okay, so M1 Finance, borrow up to $5,000 with 0% interest. Free interest on margin lending in May and June. Gives you every reason to replace your couch, fix your car, or extend your vacation without slowing the roll of your money in the market. I'm gonna go ahead and keep reading. New lower requirements for M1 Borrow. And you guys know I've did a review on M1 Finance. This is not, they're not paying me. Disclaimer, I use the app. But as of May 1st, M1 Borrow is now available for those with $5,000 or more invested on the platform. Borrow up to 35% of your portfolio's value with ease and pay it back on your own time. No extra application, no payment schedule. 3 clicks to borrow. They trying hard. I'm just reading this long story like, get more for free when you try M1 Plus. Tap into our everyday low interest rate of 2%. Unlock a second trade window. Invest AM or PM. Get smart transfers. To me, y'all, when I hear that, it even if you keep going, it says your money never has to stop working. Take a 0% until June 30th. I don't know what money they got sitting over there at M1 Finance, but they are definitely, they definitely are like, yo, we trying to give y'all this money.
Yeah, because they got it real cheap.
Yeah. I know y'all probably can't see that well. Oh, wait, we're sharing the screen. So let me do this. So
their attitude is if they're giving it to you for 2%, I wonder what they got it for, which is probably almost 0%.
And I know, I'm sorry, y'all, so hard for y'all to see it, but I'll do a screenshot and put it onto the in the community section. Let me go ahead and screenshot it a couple times because yeah, they came hard. And disclaimer, I am the host of FitCon 2020. I know they're a sponsor this year. No disrespect, no issue, yeah. But I just want y'all to understand that, like, if you have 5,000 in your account with them, they're like, look, I kid you not. Like, even if you read, and if you're one of their, you'll see it this week, or you probably haven't seen it for a while, but it even said, hey, look, if you got 5,000 in your account, even for one day, I'm not even joking. It clearly says wait at least one business day from the time of reaching $5,000, and you can borrow up to 35% of your portfolio.
Yep.
Y'all, they know. People need the money.
Yeah.
Like, that's the only thing I can think of. Like, they know.
Yeah, and a lot of the bigger players in the market operate on margin. They don't really operate just on cash accounts, and so now they're making that available to smaller retail traders because it allows you a lot more liquidity. If you want to see a play, you can make the move on it now because you actually have the cash in your account, as opposed to worrying about a transfer. So what they're doing is really just trying to help the customer out, create more liquidity for the customer, make things more available to them. And then, because one of the biggest problems a lot of people have is capitalization and liquidity. When they need money, they want it to be on hand. So there's nothing wrong with that. A lot of other platforms also provide that same service. So it's not a negative thing as long as you know how to manage it properly.
For sure. So I just want y'all, that's why I be telling y'all, like, pay attention. And again, disclaimer, I have affiliate link for M1 Finance. I put it in all the channels. It's in the disclaimer. But I just wanted to peep that out because I was like, when people act like, oh, how can you make money? There's a million ways to win. Yeah, and exactly. They are loaning money. There's still real estate loans going out. So same thing here.
And like you showed is that they're advertising to you that they want to give you the money. So it's not like you got to search, poke, and hide, and knock on 30 doors for it. They want to give you the money because there's so much liquidity in the economy now. So if you know what to do with it, it can put you in a position to be really successful. Where in other parts of the world, it's hard to get capitalized. It's hard to get any kind of money because the actual economy and liquidity is so tight.
For sure. I see you guys are posting a lot in here. Again, somebody said if Dave Chappelle did an hour on options trading, it'd be wow. Michael Blurry spoke on gamification. Entertainment is a major key. Again, some coins and stock, I priced it by the weekend. Funny. Yep. Congrats, Seed. I'm proud of you. Check out vlog. What are their thoughts? I don't know. We'll pull it up, but it's hard. We'll pull it up, but it's hard for me to do on the spot stuff for Dave. I try to be respectful, give him some time to research it. Tom and Dave bring a lot of gems on his YouTube channel.
Appreciate it, Anthony.
Wall Street runs, Main Street's money. That's right, Roscoe. And people try to act like they're two separate things. They really are not. Anthony Bass also said Diamond Dave drops a lot of gems and gets a lot of information on his YouTube channel.
Appreciate it.
Let me see. Y'all got a lot in here. I'm trying. I'm not ignoring y'all. If y'all see me skipping stuff, I'm not ignoring y'all.
Yeah. And yeah, Wall Street does need Main Street's money, but that's why we want Main Street inside Wall Street. It shouldn't just be for like an elite group of people to sit there and make all that money amongst themselves while they're utilizing your money to do it. So, you know, we want y'all in Wall Street so y'all can get some of that money too, because I keep telling people Wall Street is like the Mississippi River. You can go to the Mississippi River and you can take a cup and you can pour everything into that cup and drink it, and it won't change the Mississippi River at all. You could go to Wall Street and you and your family could pour $100 million out of Wall Street this year, and nobody would notice it because there's that much money over there. So it's like being in the market that has so much capitalization to it. You could pull millions out of it and nobody would notice it. So it's just another way for you to make money and to be successful and not have to worry about, like when you're working a 9-to-5 job, is that there's a cap on how much I can make in this particular area. And that's one of the reasons why you may not have been exposed to it, because I think once you realize that there's really unlimited money over there, it'll change how you see the world and how you see your relationship between you and the way in which you earn money. And peace for Tam for making money on AMC. Yeah.
Okay. Sly Cooper, I see you. I'm gonna address it. Kingston J said, "Do not use margin."
yeah, that's one thing. Because Kingston, I would want to short stocks. I'm a big put buyer. I'm really good at puts. I'm really good at the downside of the market. But I worry about margin because the guy that taught me the market told me don't take on margin. But the challenge is that I can't short stocks without margin because I got to borrow the stock to sell it. So that's one of the biggest issues. So if I want to become a better short seller, I have to take on margin to short sell instead of just buying put contracts, because the problem with put contracts is you got an expiration date on it. So I understand what you're saying but it's something that I struggle with because I want to take larger positions, and to do that, I wouldn't need to take on a margin. And my brokerage has offered me margin a lot of times, but I just never taken it.
Okay. So again, I don't mind being wrong. I don't mind being corrected. He talked about Dell. I'm just going to show it real quick. I just want to clarify, because Dell is here in the city. The company has taken themselves private. But again, what happens when you owe, oops, sorry, let me pull it over. I actually got to show you the screen. Okay. What happens when you take your company private, right? A lot of times, let me go ahead and share it because I don't want to, as I'm talking, I hate that. There you go. All right. So here is just one of the many articles on Dell. Let me just go there. Another reason to buy is the pending spinoff of VMware, announced April 14th. It will need to borrow money to pay the special dividend to its shareholders, including Dell, which owns 81% of it. Dell's part of the cash is $9.5 billion will be used to retire the debt. The two companies will remain closely linked for at least 5 years. Now, what do I mean when I say Dell took itself back private in 2013? Privatization. You can go read about this. It's fully documented. Okay. This whole article, and I'll put in the chat, why did Dell do what it had to do? Because every quarter and every season doing stuff for shareholders throws your company off from true growth and true, really how a business runs. Let's just say it like this. I could have losses for 3 years in a row, and then the fourth year I come out like a lion. Yeah. But if I'm having losses 3 years in a row in the stock market and my shareholders are dictating what I have to do every season, then I'm doing things that don't contribute to the growth from the fourth year. So did Dell take themselves private in 2013? Yes, they did. You can go look this up. Can you get shares now of Dell? Yes, particularly. We can go into a whole deep rabbit hole, but the fact is that Dell took its company from bought a bulk of its shares back because it could not appropriately save the company and play what shareholders wanted to do. But
Yeah.
we could go into a whole thing, and I don't want to, but
Yeah, and what you're talking about makes a lot of sense because he may have felt like for me to get to where this company needs to get to, I need to privatize it so I can control the direction and not be beholden to shareholders. And that's
and
why we
that's all
buy
I was
all our
trying to
stock
say.
up. Yeah, and that makes a lot of sense. And then once we can get back to a position, we can go back public again. We can recapitalize through the public markets and we can increase our market value and then we can start all over. So I understand exactly what you were saying, and that's a good strategy. And I've always said that there's some companies I think would operate better as private companies. I think them going public might have been the worst thing because now you got to report to shareholders every 90 days. And because in America, we have a short attention span, we want something to happen every 90 days, as opposed to what you were saying is that we got a 4-year plan to try to get somewhere. People don't want to wait 4 years. They want 90 days. They want to see something.
Okay. So to finish the last part of what I was saying, there was a transfer of Dell to Silver Lake, which is a private equity firm. You can see this in this article. I'll give it to you. It now owns 29% of Dell. Silver Lake took Dell private in 2013. Okay. Then they bought EMC in 2015. I live here in Austin. We literally have to hear about this news so much it drives me crazy. Along with 81% of VMware. It returned to the market in late 2018. So again, I will gladly admit when I'm wrong or I'm off on a thing, but 2013 to 2018, you could not buy Dell. It was for 5 years. It was off. Then they returned. And so now Dell is getting this $67 billion in debt as early as 2020 because that's why they're selling VMware. So I don't want to be a smart ass. I don't want to be disrespectful, but I just want to be very clear. Like, I study these things. I live here in Austin. Like, I have to hear about this news all the time. So yes, there was a 5-year window where Dell was private, and now there are people making money on it. But again, if you live here in Austin, you see the fact that Dell has 10 buildings and only half of them have people there. And then with COVID, almost none of them have people there. So when I say that Dell may be doing as bad as IBM and you just don't know, that's what I mean.
Okay.
Just to clarify. Let me see here. Whoops. All right. And then look, there you go, Curtis. Congratulations.
There you go.
He ready. He like, send me the check.
Yeah. And yeah, there's no wrong with access to money. I mean, there's nothing wrong with it. Yeah, she's right. Public, we only care about the next quarter, and it makes it hard to play the long game and not to sidetrack the conversation. But a lot of people are saying that's one of the advantages that the Chinese have, is because they think 100 years, 50 years. And in America, we think quarter by quarter, and we look for revenue per quarter, and so that can be an issue. So I really appreciate that comment, Sherry, the business plan writer.
For sure. And I just always want to be transparent with you guys. Is like I'm talking again. It's very hard to run a show and just, we don't have teleprompters. We're literally doing this off of here. So when I stopped the show, I really wanted to address it just to be like, Sly, like, I hear you, but let me just go ahead and do this. Again, people say, 90% of day traders lose money. Again, the average day trader makes 20,000 to 500,000, according to the Houston Chronicle. And there's a lot of people who love going on their YouTube channel and say, well, 90% of traders lose money. Are 90% of traders actually studying the market? Are they taking classes like Diamond Dave has to offer so that they're really equipped to actually trade? No, a lot of these people are doing meme stocks.
Yeah. And
Congrats, Curtis Davis.
Are they trying to learn just off of YouTube, which can be difficult? So that's one of the problems. And Curtis Davis, that's a great run on GME and AMC. Was that on options or was that on buying the stock, if you don't mind me asking?
And I'll look in the thing for his response.
Okay.
And I'll type in the Vaughn stock that people are talking about in the chat.
Okay.
Let me see here. Let me go here. Is this what you guys are talking about? I'm literally typing off to the C. Vaughn is a nice uptrend, broke the trend upwards on Friday, but came right back down.
Okay.
Let me see.
Vanguard Russell ETF, DJ Crown.
Yeah, Dell is located in Round Rock. I mean, if you actually drive by here, if you actually live in this area, I know men who are 52 years old. They lost their job at Dell. They've never been able to get back into tech for various reasons. Some of them. So like when companies here dominate, like they dominate a region, like this is conversation that we have often. He said he bought GameStop, no options, stayed in 2 weeks. And
Okay,
listen, option trading is I've studied like 4 people's courses, and I've been like, okay, I can do this. I think I can do it. You have to be paying attention a little bit there.
Yeah.
Okay, so I shared the screen. Can y'all see this? Let me see. There you go. The Vanguard Russell 1000 Growth Index ETF.
Okay.
Okay, so this is 1 day. Let's go for the 5-day. Green.
Green on the 5-day. It was green on the 5-day.
1 month. Woof. Let's go 6 months.
Yep.
Got some up and down here, up and down. Where is this at? This is the $59. Yeah. March 8th. Yeah. $61. $67. Back down again to $62. Okay, so let's go here. Year to date daily return total yield. Okay. Let's see here. Let's go year to date. Let's go 1 year. Let's go 5 year.
Yeah, it's a good movement on the 5 and the 1 and the 5. Yeah. So I mean that looks like a good long-term hold. I don't know what's in it. I don't know what its holdings are.
Okay, let's see.
For the 1 and the 5, it looks nice because it's not like you're not seeing that big spike. It's just gradual.
Its top holdings are Apple 10%, Microsoft 9%, Amazon 7%, Facebook 4% basically, Google 2%, Google Class C 2%, Tesla 2%, Visa 2%, Nvidia Corp, and MasterCard. What's interesting about ETFs is like the reason Cathie Wood is so popular is because she did a good mix. But if I look at these holdings, I could go buy these individual stocks myself.
Exactly. And also you can just do your own portfolio. And that's why, I try to get people to understand the market. You can just go buy those own stocks on your own and you just figure out based on how much money you have, what proportion do you want to be in each one of those particular companies. So a lot of people just get to ETF because like they said, they would rather pay for the manager to manage it and let them worry about it. But you can do it on your own if you kind of understand the market and what you want to accumulate, because essentially that's just a tech ETF.
Yeah.
Yeah.
And that's its top holdings. That's what I mean. Everything it has. Again, you guys can always go look at their websites. They usually do provide a list off of what's inside of it, but they're paying attention to the market at such a level. I would say that they know when to let go of some stuff, buy some more of some stuff, and that's what you're really paying for. You're paying for someone who's fully focused on it.
Yeah, you're right. Because one thing about Cathie Wood is that she operates more like a trader. She's just came out and said that if she gets into something and it goes up, once it hits a certain top, she's selling, and when it goes back down, she's going to buy. And so she just something is kind of topped out. She's going to sell and get out, get that profit. And when she believes that something is on sale, she's going to buy in. So she just trades in out of positions all the time.
Thank you, Sly. I'm not giving you a hard time. I just want to he said, I thank you. I appreciate you for watching the show. I really do. Let me see. Y'all have look over the 5 year. I do. I did. I showed you over the 5 year. Let me see. I think he'll be back in a second. There we go. Welcome back.
Sorry about that.
No worries. I'm gonna put Diamond Dave's course inside the chat. I see you guys asking about it, but I'm gonna do it. Give me a second.
And DJ Crime, what kind of music do you DJ?
DJs always surprise me. They be over there just. This one guy was over there and he did all New York music out here in Austin.
Because I don't know if is that your name? Because I have my brother-in-law's name is DJ. That's his actual name, or are you an actual DJ?
Okay, and so I put his course in the chat. I'll keep posting it, you guys. And it'll also be today when I send out the Juneteenth email for like all 15,000 people on our email list. Woo! Hopefully everybody get to see it there. Curtis Davis said, I want to learn options. Diamond Dave's class, I put it in there.
Hit me up, take the course. My YouTube channel, you can find it at Diamond Dave, also has a lot of really good basic information on the actual options market. So you can also get an introductory as far as how I teach. But yeah, the course can definitely help you out, especially if you're into GME and AACs, a lot of the more speculative plays with a lot of volatility. You can really, make a lot of money on the options market, and you can leverage that with your trading also.
Curtis Davis,
SFXX.
I don't know what those are, but I can look them up.
Yeah, I don't know. Yeah.
I do hip hop and R&B. My son's name is Dylan Joshua.
Joshua to keep the DJ. I feel you. Okay, I feel you. Yeah, my brother-in-law's name is DJ also. That's not like his abbreviation.
Cathie just bought DraftKings on dip. Did we talk about DraftKings?
Exactly. No, I mean, we posted it. I know you had reacted to it when I talked about it on social, but no, we didn't talk about it. But yeah, that was interesting. And I wish we could talk about it because of what has come out about them. That's really interesting.
Listen, DraftKings and this other thing. Go ahead and bring it up. I'm gonna see if I can find it, and I'm gonna put it on the screen. Yeah. I ain't gonna say the word, but I'm gonna put it up here.
So just based on what I understood, is there's a company that does they're professional short sellers, and they put out a report saying that DraftKings has some association with organized crime. That's allegedly. And so they were saying that because of that alleged accusation, they felt like, DraftKings was kind of maybe exposing their subscribers, I don't know if you want to call it their members, to maybe some nefarious activities. And so they felt like that meant that the stock should be shorted. And so we came out that morning, it sold off a little bit, but it kind of recovered over the day. Because a lot of people were saying that, it's not unusual for organized crime to be involved in the gambling space. So they're like, that's not even news to us. So it was very interesting that came out about them. So we want to kind of see if they have some legs. But I remember when that came out that morning, and what we're seeing with a lot of these professional short sellers is that when they put reports out, the stock goes up because people come in and buy the dip, just like Curtis talked about.
Okay, I'm gonna share the screen again. So these coins, and they be calling them S coins, and it kind of cracks me up. I'm gonna pull it up. I'm not gonna say the word, but I feel like they just be doing anything. Here you go. So this is one of the. Whoops, let me go. Right page. Let me see. Here you go. This is the name of one of the coins.
Okay, I hear you.
And I looked at the article and I'm like, I know when they were typing the article, they were like, y'all play too much. Yeah. So if you actually go Google this financial, I'm just saying P Financial, the articles on it have been, exactly what you think. Do you like, and it's just been cutting up. So right now it's got 168,000 US dollars in it. And it's been going up, but it came about because of the DraftKings conversation. One of these coins, like, where is this money going? Over here, if you look at DraftKings, this is the 5-day right here.
Yeah.
This is the month. Okay. This is the 6 month. Can you see it?
Yeah, I can see it.
Okay. This is the year to date. It's green, but the last 6 months have been bloody red.
Yeah.
Year-to-date green, 1 year, 5 year.
Yep.
So what are your thoughts on this?
I mean, so this is the thing. One, I'm not a sports gambler, but I understand the appeal of sports gambling and sports wagering. So I know there's a massive market there, right? So I understood their value proposition. I understood their business model, and I like the fact that they were able to launch kind of got a lot of traction before COVID, as the sporting activity would start to pick back up. They just got to try to figure out how to get people, I don't know if you'll call them members or subscribers, or to do business with them. And it kind of what's their sticking power. But when you see people like Art buying it up on the dip, we think it could have some legs. It was a SPAC. I'm not a big fan of SPACs, but it doesn't mean that they're all not good. But I don't, we know that any kind of sports wagering, especially international, it does have some connection to organized crime. It doesn't make it negative. It is what it is. So I don't necessarily know if that short report is an indictment of that particular company. But one thing I do know about the sports wagering space is that it's an addiction. It's similar to, it's an addiction. So if you can get somebody to become a customer of your particular platform, it's very unlikely that they stop doing their activity, because it's kind of like they're addicted to it. So I'm a fan of the model because the lifetime value of the customer in that space is very, very long. It has a very extended value. That's kind of how Vegas makes their money. So they just got to kind of figure out what their value proposition and what makes them different. And then what areas are they going to allow wagering in or activity in, and how does that appeal to their buyer? Because here's another name. There's a company that I know a lot of people gamble through, and they're not publicly owned. I think they're called Bovado. And they're really big, but they're not publicly owned. And I know a lot of people that utilize that because, like I said, is that sports wagering is addictive to a lot of people. I mean, I know people that play parlays and all that kind of stuff. I never got into it because it's not my thing, though.
Well, part of what and you know, I'm a libertarian. I know everybody thinks I'm super conservative here. I'm all no harm, no foul. And people, if you do not provide a space for people to do things, they will take it underground and it will be dangerous for everybody else.
Exactly.
So when you had bookies on the corner, you had local shark money folks, you had people going to bingo halls, right? When you had when we talked about this before, the South will rather cut its nose off than to let y'all play bingo every day, right? You can only play it on Saturday. Don't you play it on the Lord's Day, right? And the casinos that are opening up, people are like, oh, casinos bring crime. No. It's not that casinos bring crime. The fact that people have been suppressed from doing these activities is what makes the uptake in crime.
Exactly.
You will always have people who gamble with their life, with the gambling dice on corners. They'll do the chicken fighting games. They'll do dog fighting. You know, I mean, if you look at what Michael Vick was convicted of, it wasn't all about animal cruelty. It was about money.
Yeah, it was.
And people really missed that whole point. They're like, oh, Michael Vick went to jail for 2 years for animal cruelty. No. He went to jail because it was money being made out there. Hundreds of people out there. And the government don't like it when you make money and they can't track it. Okay?
Exactly.
So,
you're 100% correct.
So a lot of people miss that part of the story. And that's all I was just trying to get people to understand, that like this is all money. Like everything that you can think of, it goes back to money, and people do everything they can to avoid money. And this is just another way to make money. Like people watch sports games and they want to bet on them. Yeah. The more you suppress that, the more people go to Vegas. Like I'll talk to people right now. Why are you going to go to Vegas? Oh, I just love it. I love it. I love Vegas. And I start talking to people. I'm like, what do you? Oh, I go bet when I go. Oh, you like horses? No, I don't like horses. They like betting. Yeah. They like betting. And so when you suppress people's ability to do something, that's why it goes crazy. I mean, say what you will. Why do we have such bad human trafficking? Because we penalize prostitution in America. You know, which it just is what it is, right? You know, you made a really good video on trick nature, and so I shared that a lot everywhere. But that's real. That's real.
It's real. Yeah, and I agree with you with the
it's a trick.
Yes, it is a spirit. It is a spirit. Yeah, it's a gambling spirit too. So you gotta allow some kind of outlet. One thing I've always told people, and I don't want to sidetrack the conversation, is that I don't think you can create a society where you get rid of vice. I just think like you said, you just push it on the ground. So there's going to be some level of vice in the society because it's part of human nature, and you can't expect everybody. Like I don't believe in this Puritan society because a lot of times it's very contradictory. It's very hypocritical a lot of times. So what you can do is try to figure out how can we manage it and regulate it in some way where we can try to make it as safe as possible, allow the public to benefit from it, and then also provide services to people if they kind of get out of bounds with it. And then just understand that it's just part of going to be a small segment of our economy. So I'm all for the gambling because I remember years ago you had the online poker. For some reason, the federal government came really hard against those guys. They had to move a lot of their operations overseas. They had issues with banking, things of that nature. And I really think they should bring all of that back and just allow people to figure out how to build models around it that everybody can benefit from it. Because like me, I would never go on those platforms. But if somebody else wants to go on it because that's what they want to do with their money, I'm all for it.
For sure. And again, people, you know, my friend watches 600 Pound Life, and I'd be like, girl, stop watching it. That's depressing. You watch somebody kill themselves. That's what people do with drinking. That's what people do with some of these activities, just slowly. So I think in the South, my uncle has said this. He's like, the reason you have so many fat people in the South is because they can't do nothing else, right? They can't go gamble. They can't go do this. They can't go over there. And so they eat themselves to death. And I thought that was the craziest thing I've ever heard. But as an adult now, I understand what he was talking about. So this is the Sophie you guys that we were talking about. It's $23 right now. That's a 1 day. Let me see if I can move it to the 5 day. This is the 5 day.
Okay.
Yeah,
I
this
seen it
is.
was it's a personal finance company.
And like
Okay.
when I think we've done a video on it here. Again, I've got you guys. I'm moving some of the stuff over to the other channel, but it's gonna take a minute. The Sophie gives out loans.
Okay.
So
I think I might have
yeah.
heard of them on one level. Okay. Okay.
Right now, revenue is $547 million in 2018. Sophie, their subsidiaries, sorry, is Sophie Lending, Sophie Wealth. What's the other ones? Gallo Processing, Zen Bank. Oh, they give loans on some of the like pay. You know how PayPal give you loans when you buy something. They do
Yeah.
that too over here. Oh, if you have Stripe, Sophie. If you have
Okay.
Stripe, and Sophie, when they give you the loan on your money, if you are like in the space like I am, that's what's giving you money.
It's gonna be
Peer-to-peer
Sophie.
companies, yeah, Sophie.
Okay. All right. Yeah.
Mm-hmm.
Stripe supposed to be going public later this year.
Stripe better give me another loan. That's why I feel like Stripe ain't giving no more loans. See, Stripe gave my friend 50K, gave my other friend 100K. They gave me 27. I was like, what's this? Right. And then they came back with a bigger offer. And I didn't take it at the time. And now they ain't offering nobody nothing.
Yeah.
And I was like, oh, I knew it. I knew it was coming. So that's Sophie, if you guys want to. And again, the reason I like talking about these is because there's stories behind these companies. It's not always the dollar part. And what ends up happening is people are so being careful. People are like, I gotta make money off this. I gotta make money right now. That they lose the whole perspective to see a year from now, 5 years from now. Hey, like when you really own businesses, like I can have a business not make money for a month and not die, right? And not like, oh my God, I'm dead in the water. What you have to have is you have to know seasons of business, and you also have to know, okay, what's the numbers I need for this to break even and be profitable? Great.
Okay.
So to me, if somebody gets pressed and want to sell $23 worth of a share, I don't understand that. I don't understand. That don't make no sense to me. I'd rather go out and get another $23.
I feel
But
you.
that's just me. like I'm gonna just go get another $23. I don't need to sell this regardless to do it. So this is the 5 year right here. Of course, they ain't got 5 years. They really only got when did they go public? On here. Oh, they've been on here like a year, right? Since December 4th, I think so. From $10 to 23. So it's hard. You really don't have a long track record to study it.
Yeah. So you're probably getting there, kind of close to the bottom. Yeah. So that would probably be like a 5-year hold minimum. And just see how they continue to build it out, because those type of platforms, kind of like, I wouldn't necessarily call it the peer-to-peer lending space, but a lot of the more what I would call personal lenders are starting to become a lot more popular because you got to figure out a way to get to people that a lot of times don't have traditional banking, or to merchants and things of that nature that don't have relationships with traditional banks that you can just reach out to them.
I think that's to me, if you pay attention to the peer-to-peer lending space, they've gone heavy to the merchant cash advance space. I'm trying to so everybody follows. Don't get lost. People that have Shopify accounts, people that have Stripe accounts, people that have PayPal accounts, people that have a couple of accounts out there. Payment processors will give you money based off of the numbers your company is making, right? Okay. So if you're doing $25,000 in a month, they'll turn around and give you $25,000. That's no problem because they know that you'll make it, and they'll just take 14%. Anywhere from 14 to 18% of your future money until it's paid back for very low interest rates. Tell me where you can go to a bank tomorrow and be like, hey, I made 25 last month. Can I get 25 from y'all? Nah, I can't do that. We can't do that. So when the bank started to be resistant to that loan amounts, this is where they came in and made all their money.
Yep.
Every business that you ever see comes in to close a gap, essentially. Right. So I know people right now who, and I'm gonna just keep it a buck. Their parents have a restaurant. I don't know how the restaurant stay open. I'm gonna keep it a buck. But what their cousin showed me is like, oh, the restaurant at one point did, like $100,000 every month. So they could get loans, which really were merchant cash advance loans, where they got to pay on them daily sometimes, or different ones they pay on weekly. And they got so big in the loan side of things that their daddy bought other stuff, or their daddy bought a food truck. And these Hispanic guys run the food truck, or their daddy bought this over there and it runs this. And so, this main business, and this is where we go back into the zombie business talk. The main business may not be that strong anymore, but once they got the cash, if you're smart, you can go put it where you need to put it.
Yeah.
So, okay, what was the last one we were talking about? Housing, right?
Yeah, we're going to talk about housing. Do you think, based on kind of how the housing market is going, people will be able to buy a house next year? Because, we're seeing this massive appreciation in the housing market from a price point standpoint, and then people figuring out how can they put the money down to get housing. You were talking about maybe some of the programs that people are using to kind of alleviate that, but where do we think this is going?
So I think the other day I was in Austin and I went to go, I think I told you this off camera. I was in this neighborhood that my friend bought houses there like for 185 less than 4 years ago. Less, like maybe 3 years and some change. And over the course of just construction and building up, most people still don't go over there like, oh, it's sketchy over there. It's nothing but working class Hispanic and Black people over there. It's not sketchy, right? But people, people love using that word conveniently. And now that same area, the houses are selling for $449,000, totally renovated, right? $390 if they're not totally renovated. And it's like egg on face of people who were like, oh, those are sketchy areas. You can't even get in the sketchy area now, can you, Susan? Right?
Exactly.
You can't even get over there. And so they call it Austin proper, the inside of the loop or whatever. What I was telling him is the lumber prices were crazy. Lumber's dramatically fallen because guess what? People will move to other products. My mom just got a deck built on the back of her house. It's with composite. Okay. Right. We know a neighbor building a shed with center blocks in the South. And it's hot in the South. Yeah. And he like, I'll build it with center blocks before I pay for these lumber prices. And people will move to other materials or they will delay processes. I know people right now who have fences that need to be done. They will not pay. If you know anything about pickets or if you've ever been to Home Depot or Lowe's, you could get like a how many feet was that? Maybe 7 feet across. I don't know how many pickets per sec, but like a section of fence for $35. Now that same section of fence is $100. And you could literally do maybe, depending on the size of the yard, 5 of those and fix one side of a fence. Trust me, I know this because me and my friend had a fencing and painting company, and it was like a racket to charge somebody $500 for the weekend. You just bought 5 pieces and you just fixing one side of their fence. It's a good racket because what happens is husbands try to go out there and do it and can't do it. They mess up the fence, they break stuff up, they tearing it up. Wives are like, yo, let's save ourselves headache and time, pay this boy $500. Well, now if each second that fix is $100, I gotta charge you $1,000. Yeah. To fix that same fence. So people literally, it threw a monkey wrench in housing. It threw a monkey wrench in Austin, in Houston, in places where we really building. I've seen companies go, we just ain't gonna build. Like there's whole sections of phase 2 and phase 3 of housing places that aren't even being built. And so as lumber is tumbling, which I always said it's a fake shortage. I think it's gonna open up for money, the price of housing to do this.
Start walking down.
Start walking it down because I really believe if we really look at it, like I'm heading to Canada in sometime mid-July. There was lumber stacked up around Canada's border. And I feel like it was a play of Canada going blank, y'all. When we canceled the oil pipeline, all of a sudden Canada ran out of lumber to send us. And it was almost funny because Americans were driving and taking pictures and Canadians were even like, hey, there's plenty of lumber. What are you talking about? Yeah. So it's just stacked up at rail yards in Canada, just ceiling high. There's no shortage, right? Like even with trucking, when Trump was having the tariffs with China, they stopped building a lot of the trailers just for 2 months. And that 2-month supply trickled down a year and a half later. Even with COVID, when you had all these people go home and not working on these things, it put a monkey wrench in our supply system because our supply system, it was so tight with it. We order right when we need it. Yeah. We don't order in advance. We don't keep a lot of inventory. We keep it small. And that's hurt us. So this is an article we were talking about off camera about Biden trying to figure out a way. Biden. The HUD aims to boost home ownership for buyers with high student loans. If you guys watch the channel, I tell you, 89% of people that go to school don't finish. So you got all these people out here with student loan debt and no degree. Yep. But go ahead, Diamond.
Yes, so this is the reality, and I was glad that you contributed that because you understand the market, I think, on a deeper level, probably even in myself, especially that home market, is that one of the biggest things that we're worried about is that as the price of the home continues to go up, a price of something cannot go up indefinitely. So what you're going to have is a lot of resistance to the price. And then the biggest issue is that, are they going to create government programs to try to make people buy homes? Now, this is going to be for people with high student loans, but what about people that maybe need help on the down payment? Because if you're trying to look for the average 20%, but the price keeps going up, that 20% gets bigger. But then you also can't make the buyer, you can't make the seller of the home accept the program. So then the question is, if I own the house as a private owner, maybe I don't want this particular program, or maybe I just want to do something different. So that's my biggest question, is that because of the monetary policy from the Federal Reserve, because of the way this particular economy is working, do we believe that if you don't get into a house now, the likelihood of you getting to a house based on where this economy is going, maybe in the next 2 to 4 years, is going to be next to impossible? Then the biggest issue is, and the biggest issue, does this now move into the rental market? Because, with the housing market starting to spike up, does it now move into the rental market where now rentals become very, very expensive? Then the question is, where do people start to live? Now, I have my own personal narrative on where I think they're going to start moving with housing. That'll be a whole nother video. But the question is, what does housing look like in the future as the cost of housing starts to go up for the average person? Because this is what people with high student loans. But then we want to ask the same question. If they get you in the home and you had to get in as a result of the program, so you really couldn't pay for it. If there's a downturn in the economy that puts stress on your ability to pay for it, now what happens to the economy? So one of my biggest challenges is that when we create these initiatives to get people in that normally couldn't afford it, they're already stressed financially. We never create the initiative to try to help them make more money. We'll get you in, and then if something happens, well, what helps everybody down the line that's dependent upon your ability to pay?
Boy, we about to go into another video. See, I want to walk you in there. USDA home loans.
Okay.
See, in this area of Austin, you can move to Pflugerville before a city gets to 50,000 people. It's considered rural, and no money down in the home. People's biggest complaint is, "Oh, that's in the country." But my biggest complaint when people say that is because you have no foresight. Yeah. I don't want to drive 30 minutes into town. Now people are forced to even go 45 minutes out of town because they didn't get in when it was USDA and no money down. So one, we move people around anyway in this country, right? Yeah. We're trying to encourage people to buy a house in rural areas. That's what we're doing with USDA loans, whether we want to talk about it or not. But are we late to the game? Right? Because a lot of my friends, young Black people, bought a house out in the, what we consider the country. People love talking about that. A year later, they were able to move further into the city by renting that house out and going about their day. Okay. But you can only do that play when you own something. Yeah. When you don't own nothing, now you in this hopscotch game of keep moving. I meet people all the time like, well, I just got to leave Austin. Why? Oh, I can't buy a house inside Austin. Boo-boo, you lived here 6, 7, 8 years. You knew the prices were changing. And so to me, a lot of these programs, let's keep it a buck. The most successful program that the Section 8 has is getting people into these programs where they get them a down payment for their house and they forgive the down payment loan. Those people pretty much never return to the welfare system. Okay. But it's getting them to believe they can get into the home, getting them to see that this is a value to do this. And all they have to do is make 12 on-time payments in a year and they'll forgive the house loan. Okay. Right. So where do we have the accountability to teach people? Just pay your damn bills on time, right? Right. There's one, but two, also, the government will never give you the tools to defeat it.
Damn, she dropped out.
Oh, we lost him. I'm gonna wait a second. I'm gonna see if y'all in here. I know it's getting on an hour mark, but I'm gonna let him come back in before I finish that statement. Okay, you back. I held off. I told him, wait a second.
Yeah, appreciate it.
Good comments and stuff. But I was saying,
what I last heard was you last said the government.
I said the government's never going to give you the tools to defeat it. They're never going to be like, hey, let me help you make more money. Let me teach you how to invest your money. That's really becomes onto the person. Okay. Right? That becomes that's where we get back into this. Well, we helped you get the house. You in there now. And even for me, when I'm from North Carolina, where I would see people who I went to high school with. Oh, I don't want to buy over there. but you willing to pay for 10 years? I know them now. They still don't own no house. You willing to pay $1,200 a month when you could own this house and your mortgage would be $350? You don't make enough money to make that decision, right? It's almost like there's a book called Nudge, and people get mad at the book because they're like, oh, the government's interfering with our lives. But it's sad that the government has to encourage you to walk and drink water and eat vegetables to take care of your feet so they don't fall off from diabetes. But that's just where we are. So y'all want the government to put you in a good house and teach you how to make money? That's a lot. You asking a lot from a government.
Okay, so this is the question we want to ask. Because see, what we saw in the last, like that 07-08 crisis is that we had there was a program, and it didn't come from the government. It really came from Wall Street because they wanted to sell more houses. They wanted to sell more houses because they could securitize the mortgage, right?
For sure.
So what they did was they went and lobbied to these politicians, create a program to where we can sell more houses. And what they did now was they lowered the qualification to get into a house. Because when I was coming up, you wanted to get a home loan, like they would go to your pastor, they would go to your job. Like the underwriter would really almost do like a FBI level investigation, trying to figure out who you were before you could get the house, because they were so worried that you weren't going to pay them their money back. Then what they did was they lowered those standards, but the problem is they got everybody in on very low standards, and it kind of a lot of people got on adjustable rate mortgages, things of that nature, but they got them in. Then they talked about, okay, so we got all these programs to get you in the American dream of being a homeowner, yada, yada, yada. Okay, we get it. Then when the economy went down, which is going to do eventually anyway, all those people could not pay for their homes, which means that those particular securitized assets no longer had that same kind of value because a person couldn't keep paying on it. So then what it meant is that whole market got tanked. So the institutions dumped those assets to people that didn't know any better, and they just walked away. That's what I'm worried about, is that we create the program, but the program really doesn't solve the problem. So it allows people to get into the home, but your biggest issue is lack of income stability. So how does this solve? Whose problem does this solve? Because we understand the original plan, it just solved the problem of Wall Street, but it really didn't solve the problem of the person. Because once they lost their job, they lost that home anyway, once that arm jumped up. So that's what I would ask, is that it could be like, a lot of times we'll come up with a short-term solution, but then how do we solve the problem long-term? So like you said, with the USDA loan, okay, we'll give the forgiveness as long as you make sure you hit all the particular terms of your payment. So that's a good deal. But to say that, if you got a high student loan, we'll create a program to get you in. But the question is, unless we just gonna wipe the slate clean on you, if you still are on the hook to pay it, what happens if you can't pay it? And then what happens to that market for these particular homes if everybody starts to default, because it can become like a domino effect?
Right. I see what you're saying. So I take it from the perspective of the book Shift. There's a book called Shift with Gary Keller, and then there's also one about demographic shift. And we're moving to a country where, boarding houses never went away, right? 1950s, 1940s, you had boarding houses where single young women, single men, my friends here, and I'm going to just say what they are. They're white people who bought houses, 3 dudes, for $176. 4 years later, that same house, or 3 years later, really, but 4 years, that same house they sold it for $380,000. They rented out the rooms. As men got married and went off, one of the original owners was still there. He wasn't married yet. Well, now he got engaged this year. And he's like, all right, we're selling this house. People with these houses, if money's funny, they're going to move people in. That's the nature of like, oh, okay, money funny. A lot of times you see these people who have kids returning back home. Y'all not talking about the mama and daddy who's 50, 60 years old, have a stroke or a heart attack, can't really work full time anymore. They move in, right? So there's, I think the numbers are, if you look at the stat, it's like 50% of all American children live in a home with somebody getting something, whether it's Social Security, grandma, food stamps, something. And so people are like, oh my God, are we worried about the country becoming a welfare nation? I said, no. If grandma lived there and grandma getting Social Security, that doesn't change the fact that family still functions, right? It's a mindset thing. A lot of these people saw what happened in 2008, and I've got friends who claim their family never recovered, right? But now they get in a house and they ain't leaving that house. You're gonna have to drag me out in the street, kind of thing. Like if nothing else, I'm gonna stay in this house, right? And so they do call them the ninja loan if you're breathing. Is he breathing? Right?
Exactly.
And I'm gonna break this off and make this a whole video. Like I'm gonna get Peter to cut it up. But my biggest thing is, if you can't tell from the last 5 years how important a home is, you ain't been paying attention.
Yeah.
You ain't been paying attention. Like, Grant Cardone's always talking about, oh, bump a home. You need to be able to be movable and flexible, because you see people moving from California to Texas, New York to Texas. There are two different types of people moving. When somebody sells their home, they family own, or they own from California, they can come to Texas and buy 2 homes, 3 homes.
Yeah.
They can come to Texas and buy a rental property, and all of a sudden now they big baller in Texas. I've met several black men who sold the home in Ohio, not even a big state, Ohio. Bought a cheap home out in the edges of Dallas because they're not even from there, so they don't care.
Yeah.
Then bought a second home, renting that one out, doing Airbnb, and his family like, you the king bee out here in Dallas, you know, not realizing all he did was take something that was $300,000 in Ohio, sell it, and buy 2 $150,000 homes on the nowhere town edges of Dallas. But that changed his whole life, his whole projected is owning something. Now, the flip side is people coming from New York, Philly. I'm going to just say it. The problems Atlanta are having is people who are leaving with nothing. And they bringing their bad kids with them. They leave in New York because they got to leave New York. They leave in Philly because they got to leave Philly. They leave in Connecticut, Hartford, Connecticut. I'll put you out there because they have to. They come to Atlanta, but the behavior has been brought with them. Like they don't have no money to really come to Atlanta and projectingly change their children's life. They just have a new city they in. I'm a military kid. I've seen it where somebody's is from they were at a duty station with me, and their parents moved them to California or, you know, Alabama or Hawaii. And you meet those kids later, depending on where they got stationed, that's a whole different kid. The housing argument, no matter who, if Gary Vee or Grant Cardone, people tell you don't need to buy a house. If you're black in this country or Hispanic, you want to buy a home. Hands down, you want to buy a home. If you're a single woman and you're waiting till you get married to buy a home, what you're going to realize, sis, is you're going to end up living with other women. That's what I'm seeing here. There's a lot of older women having to share a house, or you're going to move in with your mama, and it's the same thing. So again, if you don't own anything in this country, and that's really how you're seen, right? People that could really vote in the past were people who owned a house, owned land. Landowners were the voters. You're just a consumer. You just spending money. I love when I hear the stories of people mad at an apartment owner. He did this, and I'll be like, and what? You don't own the building. You just pay rent there. So my biggest concern in this whole thing is when people say, well, my student loans are preventing me from buying a house. That's really not what's buying your house. Low income's preventing you from buying a house.
Exactly.
The government ain't going to go out of its way to make sure you make income. I mean, it just ain't. Same thing with Atlanta right now. Atlanta could come up with a program to train a bunch of kids on tech, because we talked about this. India right now is on a extreme lockdown. United States for a year, Kamala and Biden were like, oh, we're going to get 500,000 Indian folk up in here. No, you're not. Between this virus, there's a year where if you're a black man or a Hispanic person or whoever, or a white person in this country, and you thought about getting into tech as a job, now's your time to shine. Because they're going to hold it off for about 1 year till that virus calms down over there. They can't even get no people over here. We've got friends whose parents are from India. They can't go home right now. Like if they can't fly back. So I'm just trying to put it out there. Like the income problem is on you to figure it out. But it's easier to figure out an income problem when you own the house and your mortgage is $1,200 and you just rent a room to your friend for $600. And now you only got to worry about a $600 problem. But when you have the whole apartment bill to yourself, and the apartment don't have to be patient with you, especially now that they're putting the evictions back. It's a different conversation.
Okay, and I agree with you, but let me, and this is what I've seen, because I'm from a city that's really was based on a lot of tourism. So I'm from a city that's tourist based. So a lot of the jobs are what we call service oriented jobs. We don't have a lot of hard industry here. We don't have any tech really. We don't have a lot of skilled labor not being big here. It's pretty much you just serve the tourism, right? So we're a tourist city, but it's not on the beach, but it's still a tourist city. So this is how they play it. So we understand that the people in government, they function really to serve the big business. That's really why they're there. So whatever big business is big in your area, that's normally who government is going to serve, whatever goals they have. So I'm from an area where the big business in our area is the theme parks, the attractions. Those places don't pay a lot of money. but they need workers. So what they would do is they would create a lot of what we call low income housing, allow you to get the home. And there's whole sections of my city where you got low income housing. It's not in the part of the city where people really want to live in, but they'll give you like a real nice house, no down payment, and then you pay like $150 a month to stay in the house. And they just build these big tracts of these low income houses. The problem is you already don't make a lot of money working in these particular theme parks, working in the service sector, unless you work as server and you make a lot of money with tips. Working these restaurants, you don't make a lot of money. They give you housing that's very, very inexpensive, but it's not like you're living in the projects. You got your own home. You got your dream of home ownership. That starts to become your lifestyle. So now you're not making a lot of money, but also you don't have a lot of expenses. And then you build your life around that. So you don't look to get married before you have children, because you don't need a husband, because you don't need a lot of money. You as a man, you don't look to become a father because you don't have to take care of a family. Why? Because the women that you're dealing with, they don't need your money because they don't have high expenses. They don't have an expectation that you need to come to the table. So then, but that works for the economy. The economy needs low income, unskilled, uneducated people to work in their business. So then it starts to become this perpetual cycle of this. And so my problem is that a lot of times what these people is claiming is coming to help you. If you don't have the mentality that it is a band-aid, it's not meant to fix my situation. It's meant to be a stopgap till I can get to my next situation. If you get caught in that lifestyle, and it happens because if I make $30,000 a year, pretty much everybody I know makes $30,000.
Yes.
If I make $100,000, so then you get caught in the lifestyle of I make $35,000 a year, and the government, because of these programs, pays all my bills. This becomes my social circle of everybody else. I build my life around this, and then you show them children the same thing, and that's how they keep it going. And I've seen this in my city because I'm from here. I've seen it go on forever, and you get caught in it. And a lot of these young kids, because they realize that money working in these theme parks is not money, they start going in the street to get money. Now they really get caught up. And then now your parents, they can't afford to get you out of trouble with the law because they don't have it. And now we create these cycles. So that's what I see, and that's what I'm worried about, because I've seen this going on. And a lot of that is what we saw happen in Atlanta. They never determined that they were going to create what I would call upward mobility programs. It was just, we need you to work these jobs. Let's keep you where you at. A lot of the jobs at the airport, things of that nature. And then now what they're doing is they're flushing all those people out because they don't need them anymore.
Yes.
Yeah.
Okay. Now I see what you're saying. I can get with you on that, because there was a hotel for sale, but it was one of those weekly stays. Okay. And if you look at the weekly stay price, about $359 a week times 4 weeks is like $1,500. And when you talk to people like, why are you in an apartment yet? Because they don't make enough money to save for the down payment to go on. And so they get into this comfort zone of there's internet here. I don't have no light bill. And those people stay there. That's why when people say, why is Austin building all these hotels? We got people living in all the hotels. Yep. like they full. And that becomes a lifestyle because it's cheap enough for them to pay for the week. Even with Torino, somebody made a comment, and I'm gonna go to it, but I like how we went into that. I get what you're saying now. I follow you. What ends up happening there is it's still the onus of that person to some point go, okay, this ain't working. Yep. And usually, unfortunately, what happens is they get pregnant, and that's when they're like, oh, I got to have more money than this. This ain't no job. I gotta go study and educate myself, and that's why. And I'll be careful. I'm treading light here as much as I can. Me and my friends who have courses, especially Black people, they don't really do this to white people. I'm a single mom. Help me out, sis. Help the community out. And really, all this whole past year with these stimmy checks and last year, you've had the tools and the money to do something different. But did you have this up here ready? Exactly. Right. And a lot of people are like, well, I'm tired of selling my time. By the time they figure out they don't want to sell their time number, they're 35 and they really haven't done anything. Yep. That's why my friend, she's like recruiter, and she's like, you see a lot of Black people starting these entry-level jobs that are great career paths, but like late 30s. Yep. Like they get it, but it's late 30s. So again, this is good. It's good. I'm sorry I'm taking up all your Saturday, but I just want to, because I feel like what people don't talk about is the starting late. There's nothing wrong with starting late. You have to start late, you start late. But when your friends are 25 to 27 and they get married and they go buy a cheap house, well, by the time they're 30, 31, they can go buy another house. Yeah. They can leave that house. And because of the stability of one, marriage, and two, it's a cheap house that he can change careers. Well, then 35, they're doing a whole new level of things. They're taking kids on vacations. They're going on vacations every year. And you're 35 and you're just starting into the entry level of like, oh, I need to get a serious job. You already starting behind. That's why there's such this, and be careful as I push here. That's why there's such a push on YouTube for people to be like, if you're a man, don't worry. You can be 40 to 55 years old and have a baby for the first time and get married.
No, you don't do that.
You got all that time. And I'm like, everybody I know who had an old daddy is like, that won't it. That won't the business. You know what I mean? And a lot of my friends lost their father, distinguished military men, but they end up having a heart attack as soon as they got out of the military because they were an old soldier trying to, with these young kids, like old, like, and people are like, oh, you're being mean about age. But I really want you to understand, like, you wait to 40 to 50 to have children. I know it's a big kind of soul thing in our community. It's a problem. It's a problem. Uh-oh, we lost Dave. Let me see if he comes back in. But I mean, they are doing that. They are doing that. Yes, they are. Right. So there's no manufacturing. Dave, we're gonna get you fixed with that Florida internet. We're gonna get you right.
I don't want to say the name of the. I don't want to say the name of the company.
No, you're fine. You're fine. Just buy some shares of it. Iman Perry said, if you're on the grind, you can do it by 35. I feel you. I'm just. We're going there in that conversation. I'm gonna break this video up a couple of segments because I know people like 10-minute segments. But you're right. He said Anaheim, ATL, New Orleans, any city that has tourism as its service base and no tech or
exactly.
Yeah.
And so one thing, and I try to get, and this is my own perspective of economics, is that I think a lot of your perspective of what you should be doing as an adult, a lot of times comes from the type of city that you're raised in.
Yes.
So if you're raised in a city where everything is service-based, is tourist-based, that's what the city businesses need. They need somebody to fill demand in these positions. So they're not bringing in tech training. They're not bringing in skilled training because we just need more service workers. And then that becomes the community. And so then it'll be different if I was raised in a city like Seattle, or if I was raised in a city like New York City. But a lot of times when you're raised in a tourist-based environment, everybody they need thousands of people just to fill these tourist-based positions. So the school system is really designed to produce these kind of people. And so that's what we got to really look at. That's why I tell, if you're going to be a parent, where you raise your child is very important to how your child is going to develop, because that environment is going to create they're going to kind of shape your child based on what that environment demands. And so that's something that I think a lot of people don't understand, is that people are raised in certain environments and they're not even aware of the fact that they can do something else, because where they're from, everybody does it, or they're raised in places, and I don't want to be disrespectful, but you got a lot of the Midwestern cities where the economy has imploded because the manufacturing has pulled out. And so everybody's essentially on a treadmill. You work these small jobs that are unskilled. You don't make a lot of money. Every weekend you party, you drink, people go in and out of prison, people have children, and this just becomes your lifestyle. And I think that's one of the biggest challenges. I started to change my life when I really changed my lifestyle and what I was involved in on the day-to-day level, because you can't do things and think that your life is going to change. You got to literally change what you're involved in and start changing your associations, because one of the biggest challenges that you're going to have is the amount of money you make a lot of times is proportionate to the kind of people that you're around. If everybody you know who make $35,000, $40,000 a year, it's going to be hard for you to get to the 100K mark, because you don't know anybody that makes that kind of money anyway. So you got to start changing. A lot of what these programs, in my opinion, do is they lock you into an economic category, because that's what business needs. And they just try to figure out how to get you to serve that economic category, but it doesn't really benefit you long term.
For sure, for sure. And again, y'all, thank y'all for hanging. Y'all been hanging tough with this. We've been going on this chat and they like it. But we're going to have to chop this video up a couple bits. Stephen James said, a lot of people come to Atlanta trying to be creative or celebrity-based lifestyle influencer. It's a hustle like social media manager was or rapper was back in the day. Whoop. Poo. He's shooting shots here. I mean, that's the same with Austin. People come here and they get real mad. They get real mad because they realize, oh, wait, like to live downtown, I'm going to need $4,000 or $3,000.
Yeah.
But who living down there? Tech people. So
exactly.
You have a lot of creative people come here and get real mad. I'm like, that was 20 years ago. You could be an artist and just live in Austin. I tell people, go ahead.
Tell Geechee Dan, I know social media influencers, and there's no disrespect to these chicks because I'm not trying to down talk them, but I know social media influencers from Atlanta that live in the city, and they living on people's couches. They not living this big time lifestyle. That's why I don't buy into it, because I know better. So they living on people's couches, but they get their hair done, they get their nails done, they set up for the pictures. So I know Atlanta's a very expensive city. It's a lot going on, but it's not what people think it is. And I know that, but I don't put people's name out there because it's not about that. But I know the real, because Atlanta, people don't know. So there's something in Atlanta that we call Spaghetti Junction.
Yeah,
Atlanta is probably in the Southeast, probably the #1 place for child sex trafficking because of the convention center. That's one thing. Atlanta 2 is very much gang related. Atlanta 3 has a large amount of drug crime because of the amount of transport that comes into Atlanta. So it's a lot going on in the underground of that city that the average person's not aware of. And if you go to that city and you can't make it economically, you get pushed into that underground. Yes. And a lot of people aren't really ready for it. They just think they are because they just see the glamour and the internet side and the social media side. But when you can't pay your bills and you can't support yourself in that city, like a lot of really big cities, you get pushed into the underground economy. And a lot of people find out real fast that they're not built for it. So that's something that I warn people about, is when you go to these large cities, the Atlantas, the New Yorks, the Los Angeles, if you don't have the ability to support yourself, it's very unfortunate that a lot of people are going to come out to prey on you because they know this is a great market of people that come here, they don't make it, and now I can take advantage of the person.
Nashville, Tennessee.
Okay.
Unfortunately, it's getting there.
Okay.
Because I saw a bunch of $1 million condos. I'm like, who is for this for? This isn't for the local people in Nashville.
Yeah.
I always tell people classism more than racism. And people get mad at me for that because it's and or both sometimes. When you don't make over $25,000 a year, you are unfortunately in a lower class, and our society lies to you. Like, even when somebody says, "Oh, to be a middle class man," I don't even like that term anymore, because middle class starts at $35,000 to $150,000. Exactly. That's too big of a gap. Yeah. Old boy making $40K telling me he makes $40K a year, baby. Like, you on the edge of poverty. If you have 4 people in your family, 40,000 is the edge of poverty.
Yeah.
So but Atlanta is selling you the hope of Black Hollywood, right? You can come down here and you can make it. And I'm trying to be careful. I mean, like, the thing about what frustrates me is when I see people who are like, and this is true what you said, people can't get pushed into the underground. Usually it's at a young age, because if you're 20 to 30, your ass know you can go do something else. You 25 to 35, you see there's jobs. You know you can go do something else. But I will say social media influencers, why you see so many women doing it, and really what you notice, if you pay attention, everybody don't pay attention like I do, but if you notice about that 31 to 34 mark, if they don't get married and then switch it on the Christian side and switch it to the influencer home mommy side and switch it to look how great my husband is, old girls get real, they go to business stuff. Like, there's several influencers I watch now who, like, she don't say it, but she's straight on the business side now. Like, she's all about, like, how do you make this money from these photos? Like, cause sexy, everybody ain't Holly Berry till they 50. Somebody by around 30, and I made a video on this, I recorded it. I'm waiting on Peter to edit it. You have to figure out a way to take you out of the equation. And what ends up happening is these people get on this influencer track and they can't let people see them struggle. That's why I'm so transparent on this channel. And I'm like, hey, this sucks. I'm doing something else, or I'm pivoting, and you have to be able to be confident enough in your skill base to go, I don't care what you say about me. I'm going to go do this now, because you don't have to get stuck on this treadmill of trying to be an influencer. So,
but this is something I want to say, is that what you're seeing, and it's this economy that we've been built, especially because of social media. And you were right that if a person young goes there, they a lot of times get pushed, and a lot of times because they don't know any better. Mm-hmm. But the biggest problem is that if you become an older person, but especially an older woman, and you don't have skill sets, you don't have skills that you can, and you also don't have the desire to develop them. Because I was talking to a woman I know that does tech up in Cleveland, and she talked about how she thinks that a woman that doesn't want to develop certain skills, that would just rather do certain things as a form, is really because she may be lazy. And so she doesn't want to put the actual work in. Because I know a chick through social media. She lives in this, I'm not going to say a city, but she lives in the Southeast. She lives in a fairly moderate city. She got 2 children. She's never been married. She is supplementing her income, and she's an older woman, so she's over 30, through doing OnlyFans, selling private videos to men. And the question is, well, unless you have the intelligence to take that money and maybe invest it by real estate, how long do you think you can run this track? And so what I think we're going to see, and I talked about this on social media, is that if you go to other parts of the world, because the economy has imploded and the government has not really done a lot of things to really elevate their people, a lot of the women are in the sex industry in one form or another. And I think you're slowly seeing that creep into the American economy, where I'm not against it. You can do what you want to do. But when you have a platform like OnlyFans that is so big, and primarily what it's based on is a lot of women selling some type of pornography or soft pornography, and it's becoming so accepted, a lot of women will rather do that maybe than develop the skill sets to actually be successful. The problem is that, what is your long-term track for that?
It runs out, baby.
Exactly. I know a lot of dancers that danced, but the problem is dancing should be a 3 to 4 year hustle. If you're dancing past 3 to 4 years, it's because you don't have a plan after dancing.
Man.
And so that's the issue, is that a lot, this society is so based on not really developing people and not trying to get people to understand how they got to consistently develop themselves. And there's also alternatives for you not to develop yourself to make your money just off how you look, or people think you're being attractive. They fall into that, but it's a short-term run. If you go learn tech, you can be whatever age and still monetize your tech ability, your tech knowledge. You can work as a consultant, things of that nature. When you get paid off how you look, that's really a short term. It's like being a professional athlete. And it's not a good look for you to be a woman that's over a certain age and you still trying to sell how you look from a pornographic standpoint, even though you may be able to monetize it on some level because of how a lot of men are. My question is, how is that sustainable for you long term? And then what are you doing to develop yourself past that, to where when this doesn't work anymore? Because what happens to a lot of women in these spaces is they have to continue to, I don't know how you would use the term properly, but they got to go to more extremes to make money.
Yeah.
So the question is, if you start here, in 5 years, where are you going to be in this particular industry? Because you got to keep going to an extreme to make money.
They're going to move.
Okay, I feel you.
I mean, I've been studying this for a while, and I've told y'all on this channel very transparently, I had 4 young ladies, and they were not black. They were actually white, and two were half Asian, who are in the industry you're talking about, when they were doing cam girl stuff. And they just realized, I'm in Austin, one was in Houston. I ain't got to do this no more. I'm getting a little bit up in age. I just don't want to do this no more. And we just literally helped them take their money. And one girl, just when she started putting her apartment on Airbnb, that was a wrap. She's all business now. And she even dating a young man who is in real estate. I don't think he realized old girl used to be a cam girl. Like, I still follow her on Instagram, and I'm like, I don't think he have a clue, because she let that life go. Like, I'm just a pretty girl who put my apartment on Airbnb, and I finally made some money, so I got 3 apartments, and that's how she's moving in Houston. Okay. And so my thing is, I agree with you. A lot of these people they don't retire from choice. They retire because they're forced out.
Yeah, exactly.
There's a woman I see right now. She's 48. Good looking for 48. Good looking. Like, you would think she's 35. Now, she thinks she's 25. I don't know how she sees that, but that's delusion. She's still selling that body angle. And I'm like, boo, you right at the door of 50. You got to wrap that up. And so I've even noticed her move into different ways. Okay. And that's the thing I want to tell these women, is like, you wait too late. There's some black women, black don't crack unless you get fat, right? Black, you can extend those years. But what I've seen people do is they move. I've seen people who have a whole different life. One of the ladies that paid me very well to help her get her stuff set up, she had a whole different life in Dallas. She moved to another part of Texas. Nobody know. She done got married and everything. Nobody know, right? And so if they're smart, they'll move and start anew. If they're smart. If they wait till they get pushed out the game, or they end up having kids, unfortunately, it's like dragging them out. of that industry. Basically, they can't. I remember I seeing this documentary on this woman that was like 50. She was still stripping.
Yeah.
Why?
Yeah.
Why? But she was always in towns where it was more men than women. She was either in an oil town, and if you ever notice the people that when it comes to stripping or sex work, however you want to say it, mostly stripping, they move a lot. Okay, right? They're not they don't have a home base. They go to where the towns kind of where they can go. And the woman in the documentary was like, she was in when the oil was booming out there in what do you call it, North Dakota, South Dakota?
Yeah, I remember that.
It's all the men and there's no women. She'd go there. She 50. She still had big boobies, but it was like, you 50. And she was doing Las Vegas. And then she was in Alaska. And finally, I think at the end of the documentary, like she couldn't do the tour no more. Ended up getting with an old dude.
Yeah.
I mean, it just is what it is. They love your explanations, but I'm glad we went here. This is a good little segment we just did there. I mean, I'm about to pull that out. I don't know if we're gonna call the title Atlanta Stripper Problem or what. But you spot on about the education system. And even when I went to Barnes and Nobles in our military town, all they had was ASVAB books. But you go to Raleigh, all the books are about tech and how to pass tech exams.
Exactly.
So they do some stuff there. But yeah, y'all are cutting up in these chats about scammies from New York. Or all my Uber drivers. Somebody said Torino can't be a real option. When I was in Alaska, we paid $150 a day to Reno. And we saw at the airport where the bankruptcy court for Hertz, because Hertz purchased Budget and all these other places, we drove by a Budget. It had at least 50 brand new cars out there locked up in the fence with grass growing over it because a part of the bankruptcy. So it's not a shortage of cars. It's just a business play. So. But yeah, finish us out. Is there anything else? I mean, the comments y'all are wilding. I mean, it's too many comments for us all to read, but
yeah. So we'll just wrap it up. So we would tell everybody look into the markets this week. Mm-hmm. Look for volatility early in the week. There's going to be the Russell 2000, essentially the Russell indexes are going to be rebalancing later
Russell
this week.
2000? Okay.
Your Russell 2000, Russell 3000, Russell 1000. They're going to rebalance later this week. So we think they're going to probably try to get some of the volatility out so they can make sure they do their rebalancing. One of the things that we want to talk about is that, and I think Ericka said she posted links. You're also going to send it out to the Juneteenth audience through the email, is that what we want to try to do is give you the opportunity to be able to make money in the market based on whether they're moving up or down. So what we saw was the market went red Friday because of comments from the Federal Reserve. I will post on my YouTube channel, it's called Diamond Dave, how I was able to make money in the market even though the market fell, right? Mm-hmm. So even though this particular stock went down, I still made money because I know how to monetize these particular situations using the options market. So what I really want to do is try to get you to understand that there's a skill set that you can develop in the market that it can allow you to monetize the market. You can do it from home. You can do it on your mobile. You can do it, if you're out and about utilizing technology, when you can take advantage of what's going on in the market and create a skill from you where you can create income. My goal is to get you to $2,000 a month because I understand once you can add that extra 20 to 24 a year to your income, it can change your life. Right, Roscoe, for sure. I can show you videos from the early 2000s in Anchorage where they're doing that. Mm-hmm. So not sidetrack it.
I'm sorry.
No problem. Yeah. I just read that because I think people are not aware of that. So the goal is to get you to $2K a month, to around 24,000 a year. And I'm very confident I can do that if you work with me. So I have a introductory level program. I also have a VIP program that's at a higher price point. But if you really want to try to figure out how to get money out of the market, regardless of what direction the market goes in, I can help you utilizing something that we call options trading. So I really want you to look through it, look at the testimonials, go to my channel, look at the information that I provided, then go back to the link that Ericka posted and take advantage of that program because I'm very confident based on what you're paying me. Once you learn how to trade, you're going to make that back years and years and years over because there's a lot of money in this market and you just got to learn how to tap into it.
I love it. See, listen, Gigi Zan said this is why most people have side hustles in the A because they can't make it off their main job. This is why I bring people like Diamond Dave on for y'all to get it. Like move to where the money is. If you ever have a little bit of $1,000, even 500, because I think you show them how to start with what, 200 or 500. Yeah,
I say you can start an account with 250 to 500. That's what I would recommend. You don't need a lot of money because I don't want you taking large positions early. Learn the market, but you don't need like $10,000 to get into the market.
Right.
Yeah.
So that's the thing I want y'all to understand. Like, I bring him on because I want to show you that you can start with, these people really do start with $100 to $200. Like, it's not this crazy thing. And I'm gonna just say this. I went to college with white kids that were just cutting up, and they understood trading. And a lot of them trade. And so when they don't like a job, they don't want to work there, they take the excess money and they really get hunched down and focused. Because they take how do you like saying it, Dave? You say take profit?
Yeah, take profit.
Take profit. They pay their rent. They pay their stuff. And so, there's a shortage of women in Alaska. There's more men than women in Alaska. It's always been that way, especially when there's booms or busts. So, again, there you go. Stop spending all eternity in a small neighborhood you grew up in. You gotta go somewhere. So, this was the last question I have, and we'll close it out.
When you say it on the ask him to explain what he means by the PDT rule, because I think that may relate more to day trading. But what I would tell Geechee Dan to do is, as a trader, what I want you to do is think about the money that you're going to make and how that's going to allow you to hire a tax professional to manage all your tax issues. So don't worry about your tax issues. Focus on the income, and then hire a tax professional to manage all your tax issues. So as a trader or as a business owner, your number one job is to drive revenue, and then hire professionals to handle all the issues that are going to be associated with the revenue. So I wouldn't worry about that. I would worry about learning how to trade, driving into revenue, driving into profit, and then hire a professional and let them worry about the tax issues, and they can determine how to guide you in that particular area.
For sure. 25K or less, you're limited to 3 trades in a 5-day period. If you do it right, you don't need.
So that's not true if you have a cash account.
There you go.
So I operate off of a cash account, so I can trade in and out of positions how I want to. All I have to worry about is settlement, but I don't have it because I operate off a cash account. We talked about earlier in the program. I think we talked about the fact that I don't do margin. So because I operate on a cash account, I don't have any rules determining how I trade. And there's a lot of ways around that I could kind of tell you, not necessarily on the live video, but there's ways around those rules where you don't have those kind of restrictions, because people are doing a lot of trading and they had to learn how to get around those restrictions. But the easiest way to get around it is just get you a cash account.
There you go. Boom.
Yeah.
Shots fired. I love it. All right, you guys, check out Diamond Dave's course. I put it in the stocks. You'll also see me put it into the Juneteenth email and also Sunday's Father Day email. I'm saying some very peaceful comments on those 2 topics in my email. And everybody, this is so vital, important. Later today, I do a show talking about Black farmers not getting that $4 billion they're entitled to. But this is important. This is why I do these shows, because somebody's got to talk about the real issues, and it's got to be more than just dating and mating and silly stuff. We can solve our problems in our society if we have skills. Yeah. And this is a skill. Point blank, period. Thank you, Diamond Dave, for your time.
No problem. Appreciate you having me on.
Long show. We was cutting up today. All right, you guys. This is your girl Ericka, Classy Climb Blog. I'll chop this up. Some of this will be put over on the stock channel, and some of this will be put over here. Have a great day.